All right, my people, welcome to the weekly overview with Prosperous Academy. And we got Mr. Frederick World on the stream. We got Kadir Kubilai, and we got me, myself, Jeremy. And I'm going to start this thing out by jumping into BTC directly. So let's do it. All right, so Bitcoin. Our dear Bitcoin. Where is it going? We're going to start with a monthly perspective. Looking at the monthly time frame, what do we got? From the 69,000, the all-time high, we retrace quite severely and quite deep, all the way down to the demand zone down here on the Fibonacci 78.6, which is at around the lowest point we hit was at about 15,600, 15,500. Since then, we have moved up. We've been on a bull rally. And the area that we have touched now, the zone that we are at is this demand zone right here on the monthly time frame. That's the zone we are testing right now. And this is an order block that is quite heavy because this order block caused this whole dump. Like you see, this monthly candles here is all imbalanced candle all the way. They took out both these lows, this low here and this low here. All right. So very strong order block. We are inside of it. And when we zoom in a little bit and look at the weekly time frame, then we start to see things clearer. We see this order block, all right? But now we can refine this order block a little bit and take it down to this candle that we see up here, all right? And what we then see is that market right now, what it's doing, where it is right now, it's accumulating. So it's accumulating, it's dipping into this order block again and again. And we had a high at 48,000, almost 49,000, just shy of 50K, right? And from there, we rejected heavily. And now you see market is dipping back and forward, dipping into this order block. And what it looks like, it's accumulation. Or it's not, it doesn't just look like accumulation, it actually is accumulation. And the question is then, to what direction is this accumulation? Well, normally in a case like this, and after a bullish sequence that we've been experiencing here for the last couple of months, we should see a severe dip, especially considering the sell-offs that is going on right now, because we got major whales selling up, we got grayscale selling up. So even though BlackRock in them, due to the ETF approval, are accumulating BTC, still though, the sell-offs are bigger. There's a bigger volume selling off. So when we zoom in a little bit more, what we then see is that market has created this lower low. So it took out these lows here. We had this thing here, and market took out all these lows and had grabbed the liquidity. It's pushing upwards again into this order block once again. And my projection to this is that we are actually doing this, boop, boop, and then we're dipping down. And that is where we're going to see a massive sell-off. Where the sell-off is going to, good question. We can start by pulling out the Fibonacci, looking at this whole sequence. And what we then quickly see, if we remove the previous fib, is that we got a beautiful sweet spot zone here, the 50% to the 61.8% that we know that BTC loves to retrace to, and we got it from 34,100 up to 36,900. So my target level for this sell-off, as soon as I see it happening and I'm getting the confirmations to get into it, my target level is 37,000, so 37,100-ish. Is my target level on this sell-off. And we can get it confirmed with a confluence here on the fib. We see that we get the 27.2 just inside of it. So if you ballsy and you want to risk a little bit more, you can get it. You can have your targets at 35,800, but I'm sticking to being conservative and having 37,000. So where's the entry then? Well, the entry is somewhere around the point where we are at right now. That's the interesting thing. So as we know, BTC loves to wick people out, grab liquidity. But here is the order block. This is the daily time frame order block that we got. The demand zone that should push BTC from now. We have seen it tap into it several times, and this is a zone that if we breach it, I think we're tapping in slightly to this fair value gap that we got up here from this candle inside this big order block that I showed you guys on the weekly and monthly time frame. But from there, we're going down. So that's it. But to give a sniper entry on this one is basically impossible right now. So we can have a little bit more upside before we see the downside. And that upside can span all the way up to 45,600, I would say. So what we need to do now this week is basically just considering or understanding if this market is going further up or if we are dropping from this order block where we are at right now and accumulating in right now. On the 4 hourly, we see this accumulation much clearer, as you see here. But we have also taken out these highs and continued on this uptrend. So from this push up that we had, from this wedge or triangle pattern, call it whatever you want to call it, the last push that we had last week, we have seen a slight uptrend, and we are continuing on this uptrend this week. So the question now comes to, will we reject from this resistance zone that you see up here, which also in the same time is an order block, or will we smash through it and tap into this bigger order block up here? And then on the refined spectrum, so here on the 4 hourly, we see that the next order block would lay here, which is at levels around, like I mentioned, 45,000 to 46,000. All right. So that's the target levels we're looking at. Either returning from here, we need some confirmations on lower time frames on the 15 and 1 hourly time frame, or we smashing through this and coming up to about 45,500 up to 46,200. That's it for BTC. Looking at gold. Gold gets more, it's a little bit more trickier to predict. So we had this uptrend here. Why is it trickier? Is because it's ranging so much right now. We have been in this uptrend that you see me, in this downtrend. We've been in this downtrend here, pushing down all the time, creating lower lows and lower highs on the 4 hourly. And the push I've been waiting to is to this extreme order block that we have down here. Why is this an extreme order block? It's because this is the order block that created this massive institutional candle. As you see, it's unprecedented. There's no candles that match this candle here. This candle is crazy. It's a 4 hourly candles that span for about 400 pips. So it's a 400 pip candle on the 4 hourly time frame. That's insane. And what we see now is market slowly but surely gravitating down towards this order block. But in the same time, when we zoom in on the hourly time frame, even on the 4 hourly, but let's say the hourly time frame, what do we see? Market is grabbing liquidity here, but also creating higher highs. So is this just a liquidity grab that we see here, grabbing this liquidity, or is this actually the higher high in this whole sequence that we see? So this candle, this push right now that's coming into Sydney and Asia session will kind of determine it. If we wake up tomorrow and on the London session, we see a massive rejection of this area, then we know we're going lower, all right? But if not, then it looks like we have broken this trend and we are now basically moving up to higher targets. And market is basically ignoring this massive liquidity zone that we got down here that I just spoke on. So London session tomorrow will not determine, but will show it, will reveal it. Asia session will show it, or Asia session will determine it. So now during Asia, we will see if market dumps, if gold dumps, or if we will see higher high created, this top taken. That will definitely say that this was not a liquidity grab, but more temporary high created in the waiting of a new higher high, and then we know that we targeting higher levels, and we have basically broken this downtrend that we have been on since the start of the year. That is what I got on gold and BTC. My man Frederick, talk to me. Frederick, you're muted.
I'm agreeing on gold specifically for one reason, because the dollar looks weak. Basically, it looks like you want to turn. So I'm looking for a buy on eurusd, and like you said, then automatically you're going to look on buy on gold also. So I'm going to share my screen. You need to make me host. There we go. So we can start off with the Dixie, how it's looking. So we have been moving down a little while now, and then we have moved up, as you guys see here. We had the last break of structure, we had it right here on 102.476. So what happened? Market came up to our favorite zone on the Fibonacci levels, the 88.6. If market respect this area, like it looks like it wanted to do now, then we're definitely looking for buys on eurusd, gbpusd, and gold. When it comes to eurusd, this is what I'm seeing on the higher time frame. So when I'm going on the 4-hourly, we have the first change of character here. We broke the high theoretically here, but I'm not going to count with this week, so we 100% confirmed the high was broken here. So all we're seeing here is a pullback. It have moved perfectly sideways and slowly down to the same zone as the dollar rejected, the 88 and the 78. What I'm waiting for now, especially on eurusd, is market to first and foremost break the 15-minute high that is here, and I think that can happen on the Asia session. So tomorrow, if it has been broken, then we're gonna look for the retracement and enter on the pullback. So we're gonna look for buys on eurusd tomorrow. gbpusd is kind of a tricky spot to trade right now. If you're gonna trade so much on this one, I wanted it at least to break one of the highs. So that means even this high or this high here on the 4-hourly, for example. On the hourly, we still haven't got any turning point on the gbpusd. So it's kind of not confirmed turned yet, and where it is in the market is kind of sketchy to start buy and sell it right now. Is, if you say to me, I think it looks like it's in the accumulation zone, same as the dollar is on the 12-hourly time frame, also still accumulating. But if you're rejecting this area, then we can look for buys for both of the pairs. So that's what I got on eurusd and gbpusd right now. I want market to break one of these levels, then we can trade, especially gbpusd. So right now we're looking at eurusd because that's what's looking most tradable right now. As long as it does what it wanted to do. We already had a little push up here, broke the last high, but it's not a like major structure high. If it breaks this order block, then we are confirmed. That's what I got on eurusd.
Like you're saying, we have a Middle East situation that basically pushes the dollar a little bit upwards, but in the same time we got the real situation that is pushing the dollar downwards, and that situation is that countries are dumping the US dollar to accumulate gold. So therefore it's a little bit undecisive on where the dollar is going, but for now it's like an artificial pump on the US dollar. And what you see here, if you scroll back there, Kadir, so what we see here on the news is that we got an FOMC statement on Wednesday, and we got FOMC press conference. These ones are super important for not only for the US dollar, but for all currencies paired against them, and for gold paired against US dollar. So why is this so important? Because this is where Jerome Powell, which is the man that most often speaks on these conferences will give an indication on any future rate hikes or rate cuts, which of course impacts the value of the US dollar a lot. So very important week ahead of us, and we will just have to stay put and see what comes out of it. That is it.
Yep.
Yeah, man. With that said, I think we're done for this overview, and we might come with an update on Wednesday after the FOMC meeting. A short little update just to see what came out of that FOMC meeting and what the direction the market is pointing towards after that. Until that, it's just technical trading basically and rumors pushing the markets.
Until that, read the newspapers.
And trade safe, for God's sake.
For God's sake, trade safe.
Yeah.
Keep your risk management. Stay cool. Peace out.
Bye.
Bye.